So in order to set up the accounting function in IXLCORE, first we have to ensure that we do the setup and settings for account so that the system is configured for purposes of accounting. So the first place we start is on the setup and ensure and once we on the setup, we ensure every setting is properly configured for the localization, where we have the time and we have the language that is key in reporting purposes, and any other finance aspect from the setup. Once the settings are okay, you'll find again we have finance setup within the setup button. Then we open the finance. So here we are able to set up the tax rates. So the tax rates depend on what rates we have, whether it's VAT, withholding tax, or any other tax that are subject to the goods that we have. So we can add a new tax. We can call the tax excise duty or whatever name that we need to do or call it, and then excise duty is we put in the rate the system here assumes as a percentage. So we can create as many tax as each of our products are aligned to, because the system has the capability of having each and every line item have its own tax. On currency, this is where we set up the currency. Remember, we talked about the system being multi-currency. It has various currencies that we are able to use. Therefore, we want to have to create a currency. This is the point where we have to create. Before we do any transactions is where we have to change whether we want to use a base currency or change the base currency of any. We want to delete a currency. Probably we don't deal with euros. Then we delete that currency and the currency will be deleted. Then any new currency we want, we just ensure that we have the correct ISO code for that particular currency, the symbol that we're going to use the currency, and the decimal separator and the thousand separator, and then where we want the symbol to be, whether it's before or after the amount, and then we submit. So currency setup is critical and it's important when we are doing the finance module. Payment modes. This payment modes is normally a payment mode that is manual. So we have automated payment modes which we can set, which we learned how to set on payment gateways when we are doing the initial setup of the system. However, the payment mode here is a manual payment mode, and ideally is normally a bank payment mode. So we can call this bank and say, we have an account with, say, First National Bank. And the bank is situated, account number is 1, 2, 3, 4, 5, 6, 7, 8. And the branch, if you need to put a branch, is situated in Balito. So we can have that bank active, and then it can be shown on the PDF under documentation. So when we have an invoice and we choose bank as a method of payment, that invoice will indicate these bank details, and it can be for invoices only or it can be for expenses. But we leave this for also invoice and for expenses when we want that paid. Then we submit. If we have a different account, or if you want to open a different bank account, then we can ideally do the same. We can come and say bank, or call bank 2 or bank 0, or whichever bank we open, and then have the details of bank 0 here with the account number and everything. And we want that to be shown or not to be shown. You want it to be selected by default on the invoice or not, we can click on that, so that when we are making an invoice, it shows the bank details. We can activate that bank for our purpose there. If we do not need that bank, we can easily come and delete, and this before the bank has any transactions. But once the bank has the transactions on it, we will not be able to delete. Expense categories talk about the whole categories of expenditure that we need to recognize, especially categories of different expenditures that are reimbursable or that deals with the client. So we're able to have fuel, the printing, the stationery, the travel. If there's another category that we want to put, we can add and say, probably we want consultancy expense. And then we indicate these expenses paid to consultants in our projects, and then submit that. So we have the categories of expenses. We can change and increase and delete as and when as we need. We can have the narration there to show people what the expenses is all about, or we can leave it as it is. Once we've done this finance part of the system, now we can go to the general settings of the account. So we go to accounting and bookkeeping module. Accounting and bookkeeping module is where we now can, here we have the accounting module, and this is the accounting and bookkeeping module. So account and bookkeeping module has various of, has the dashboard. In dashboard is where we see the summary of the accounts, the summary of the details in terms of the invoices that have been issued, in terms of the transactions that we've done, on a nutshell from the dashboard. But before we go to anything else within the account, we will go through all these items in the accounting. For now, and for purposes of this training, we will do the setup first. So in the setup first, it's important to recognize one, in the general setting, here, reset data. If I want to reset the entire data of the module of the system of the accounting, I can just click on this button and it will reset. If I have invalid entries in the system, I will reset from here. One, we have to recognize the financial year. So before we do anything on accounting, is to ensure that we recognize when the financial year is starting and the first month of the tax year. So ideally for our purposes, if our month end starts in January, or our beginning of the year starts January, and we use the same as financial year for purposes of our tax year. We can change to February, or we can change to whichever jurisdictions. Some, like in South Africa, the 1st of March becomes the beginning of the financial year for many companies. Then we can use that and have that as the same as the financial year. There are two core accounting methods to use. We have the cash accounting and accrual accounting. So cash accounting means we are dealing with cash basis. We can only record transactions, or expenses, or income once the amount of money has been received. However, in accrual accounting, we account for income or expenses at the point of the transaction happening. So the difference between cash and accrual accounting, we can use the system too. And this is what the system would use to make or generate reports. So whichever system we use, and for our purposes, we use accrual method. Chart of accounts can be able to show numbers, or can be, and we would not be able to show numbers also, depending on what we do. So when I click on this, I will say that all the numbers that we are developing on chart of accounts need to show numbers, or not to be able to show numbers. I just change this, or I indicate I want to see a chart of account with numbers. For purposes of now ensuring that we close books on a period and period basis as we continue, we highlight this to close the books. If we close the books and pick the date where we are closing the books and say we are closing the books on 15th, any person posting transactions on 14th or on 13th or on 18th, the system would alert that changes are, or there will be a warning before you make those changes. The system will alert you that you're posting to a period that has been closed. So we normally use this for purposes of tax. When you're closing out, say, VAT, you do not want sales invoice to be captured in a closed period. You do not want to do a reconciliation on bank on a closed period. Then you close the period so that nobody can post on that. However, the system would allow the posting with a warning. So once you've agreed, or you've said now we want to pass all the transactions to close on that particular date, you save, and then we're able to submit, and the system saves those entities as they were. The next thing is on the banking rules. Banking rules help us in our performance of transactions and when we are doing our banking transactions or when we're doing our banking entries. We align rules to what we want to see in the system. A rule can be if the transaction in the bank statement says bank charges, that the system will automatically align all and match any entry that is shown as a bank charge. So we just add the rules and say, and give the system instructions and say, the name of that can be, say, let's say the rule is bank charges. Bank charges is money out and includes any money. So anything that has, so any money out with a description, we can put the description there and say the description, or we can put as an amount, but mostly bank charges vary from month on month. So we will say description is better. And that description contains bank charges. We want then to assign that full amount into an expense or an expense account we call bank charges. Let me see if we have an expense called bank charges. Yes, we assign that to bank charges as an expense. And we can say we auto add or automatically apply when the rule is it. So every time we upload our banking transactions and the system recognizes a narration, a description that contains bank charges. Remember, we say contains. Contains mean it can say bank charges or bank charges inside other statements. The system will highlight that for us and auto allocate that entry. We do not have to manually allocate to bank charges. Then we're able to submit that so that that becomes a rule. Then we can create other rule and say when we see money in, we add another rule and say whichever rule we call it, we say consultants. And I say when you see money out, any, and we know that probably we regularly pay a consultant some amount of money, and I can say the amount and say that amount equals. So this equals exactly, say, 1,000 rands every month. The system should assign that money to, say, consultancy expenses or management compensation or whichever expense that we are saying, and say, let's say professional fees, and then we submit. So the system will be looking at this amount of 1,000 every time. If it sees 1,000 every single month, it will allocate to that particular. So we can set as many rules as we want, or we can also delete the rule if you are not, it's not serving our purpose. That's the purpose of banking rules. Now, there is a very critical part in finance, and that is mapping setup. Mapping setup, you're mapping all the accounts so that you don't have to do this on a regular basis. So that the system can pass the back-end entries for us, we are able to map all these entries. So automatically the system comes in and maps, already mapping up the core entries. So that when you do a sale, the system will generate an accounting receivable entry on the back end. So you'll have a sale income and an accounting receivable. When a discount is done, also you find there's an account receivable and a discount given as a cost of sale. You can't change and say if we do a sale income or an invoice is raised. When an invoice is raised, you want a different entry operation with the system, then you're able to say that, and then you're able to say, where do we deposit this money? I don't want it to go to receivable, I want that to go to cash and cash equivalents. Then you change that setup. So that once you raise the invoice, the next entry or the other entry on double entry, remember double entry, it will send the money to cash and cash equivalents. But since we are trading and we have this, then we have accounts receivable as the corresponding entry. So we can say that, and then we can also talk about payments, and we create a payment. So whenever we do a sale, there's an account receivable. That means when we receive the money, the system goes ahead and does an entry to the account receivable and then deposit to cash and cash equivalent. Here, because we use the bank, we can change and we say we want the money to be going to KCB because it normally goes to the bank. So that automatically when you receive a payment from a sale, it has an entry on the account receivable and then to the bank. Remember, these entries here are tied to the invoice entries and the account mapping. So once you map all those sales, you can map the expenses. The system has the capability, we saw in a prior video how to create items. So we can also map specific items to specific, such that if I pick a particular item, if I select a particular item, like we created item A, when we create an item A, so that when I'm selling an item A or I'm creating an item A, it will go to either from an, because in an item, when it comes through, it will be an inventory or asset account. I can say a sale of product income, or I can say I still want this to be a sale of the product, and then the expense account to be a cost of sale, and then I submit. So if I pick that particular product, these are the entries the system will do for us. And you can map as many products as we have, or you can delete if you're no longer using that. Payment modes, mapping. So if somebody pays with cash, if somebody pays with Paystack, we can say if this person comes in and pays with bank, or we have a bank payment, we have a Paystack payment, where do we want the funds to go? We have sales account receivable, they deposit to KCB. When it's an expense, it's cash and cash equivalent, we deposit to account record. Then we can say this can go through to the bank or whichever GL that we do, and then we submit once we are okay with those modes of transfer. Then we talked about tax, which we've done. So we can create how the tax can be done. So if it's excise duty, where do we want excise duty to go? It can be income tax payable, liabilities, but we can open a GL. We're going to do that in accounting and open GLs, and then put in the correct accounting, say income tax payable or excise tax payable, current liability, and then account receivable. When we pay, the entries that are going to happen. So a payment account should be the bank, or if you're paying through cash, and then where do we deposit to? Same with purchase and deposit to. One, we're dealing with different. Once you're okay with the rules, you submit. So this is a core part of the system where you have to map the entries, and you can map the general entries, you can map the payroll, you can map the general entries. Then we can go ahead and map the payslip entries. So all those commodities in a payslip, that means you have the insurance, income tax, net pay should have different accounts, so that once we clear the payroll, publish the payroll, the different entries are passed through. Same with purchase, inventory, manufacturing, which we're going to do, and fixed equipment when we purchase, how we handle each of those entries. When we say an asset, where we're paying from the bank, we change that, and which account receivable. So we have also accounting detail types. This is still on setting up of accounts, different accounting details, different accounting types. Therefore, we are able to set the different accounting types, and those are aligned to either accounting, the core accounting, which don't change. So these all are fixed and do not change, and we cannot delete from this. So when we create a type, whichever type we create, it either has to be account receivable, a current assets, or whichever account we do. So we can say it's a current asset. We want to say it's a, let's say from previous example, we take a current liabilities, we say excise tax payable, or whichever the case might be, and then it will be a cash flow. Is it from operating activities? Is it from investing? This is normally from operating activities. I can put a narration there and then submit that. We can create as many as we want or delete those again. I will not talk about played environment, but played environment is connection to live environment of having a bank connection, where we're going to get information once it's fully live. But most banks in our scenario, the only bank, say in Kenya, is Equity Bank, that is under played, where we can connect APIs and connect client IDs so that the transactions will be pulling automatically to the system. So once the transactions are pulling down automatically to the system has the rules that we set on earlier. So when it sees a bank charges, it allocates, and we're going to do that when we're going to do the bank reconciliations. Income statement modification, if we need any modification in terms of how we recognize our income, or what the income types, the net income, and the account that we need to, we can modify that and put that accordingly and submit. Currency rates. Remember we talked about the system being a multi-transactional, multi-currency, multi-entity. Therefore, we get online currency rates. The system is able to update on a daily basis on the rates, and we update. So anything that is a client in a different currency is going to be converted at that currency that is online at that particular point in time. So if there was any USD ZAR transaction, the system will convert today at this rate of that, at that rate. Therefore, this is a currency rate log that will allow us to keep the currencies, and we're able to know what currency was in a certain day when you're doing exchange gain or losses. So in a nutshell, those are the cost setup for us to start looking at the accounting module. So we've looked at setting it up from a setup perspective, had all the taxes, all the currencies, ensured all the currencies are set up, ensured the taxes are set up, and we've now set up the structure in terms of looking at the general system as a whole in terms of the accounting, which is our financial year, our end of the year. We've done mapping for key accounts and key payments, and we've looked at the currency rates. That sums up basic and very fundamental, especially for the accounting system to work. If we want to work, the system to work well, those settings must be set well. For our reporting to work well, our first month of the financial year and our end month must be well recognized and saved. We can always change and put in a different month and submit. Thank you very much. That marks the beginning of us looking at the accounting module. We'll look at the chart of accounts as our next training. Thank you very much.